Alright, what's up guys? It is Sunday, August 7th, so we'll go on ahead and jump into the weekly watchlist video here. And we're looking to keep the momentum going this week, guys. Since we launched the Big 3 indicator back in July, we got a pretty good streak going. So, looking to keep the momentum going, and, in terms of the market, that's kind of the question as well. Can the bulls keep the momentum going a little bit longer? So we're pretty overbought. I do think at some point we should expect, a pull back to the 21 EMA, but in the short term, maybe, just maybe, the S&Ps have got enough gas in the tank here for a push towards 420, the big lucky number. So we'll dive in, guys, and we'll start building up the watch list for the week ahead. Alright, guys, so we only had 2 trades last week, 2 winners in Shopify and GameStop. And we're looking for more trades just like this week. It's pretty much the go-to trade. Find something trading at the daily 21 EMA. Then if we can get the buy signals on the lower time frames from the Big 3 indicator, that can trigger the push towards our target of +2 ATR. So we hit shop in the mastery for a nice 80% return, and then for those of y'all doing the live trading from the Big 3 class, we got ourselves a little bit of GameStop. Daily squeeze, trading to that daily 21, 4 hour, 2 hour, 1 hour, 30 minute, 15 minute, 5 minute, whole bunch of buy signals there, and we took profits on Friday on that push towards +2. So GameStop was good for, let's see, a little bit more than a 50% return. So, since we launched the Big 3 indicator, back in July, here's the trades that we've done in the mastery. 6 trades, 1 loser in Pepsi, and then winners in Coinbase, Zoom, Cisco, XLE, and Shopify. So keep in mind, I'm risking 5% of my account per trade. So in terms of taking 5% risk, after these 6 trades, just about 13% account growth. Now, even if you're risking half of that, 2.5% risk per trade, that's still a good, 6-7% return over 5 or 6 trades. So that is a momentum that we're looking to keep going. And I'd invite you guys to come check out the mastery. So we got a little trial going on right now, 30 days for $47. Come check it out, guys. I'm pretty confident. You come rock with me for 30 days, we'll find enough trades to make back your $47 investment. But you'll get access to all the Big 3 trade alerts, and we trade about 2 to 3 times per week in there. Always on Thursdays, always on Fridays. Every now and then we throw in a couple bonus sessions, but I'll put the link to that in the description of the video. Come check it out, guys. I'm confident you'll learn something. I'm confident you'll make back your $47 investment. Looking to keep the momentum going. So for the overall market, guys, not too many changes here. Okay? The bulls made progress a few weeks ago. They've kept the progress. It's a swing trader. The major thing you want to keep in mind right now, we are a little bit overbought. Pretty much across the board. So the S&Ps are up here at +2 ATR. You got the QQQ at +2. You got the IWM up here at +2. And then a lot of your sectors like XLK, the semiconductors, the utilities, XLU, the transports. A good chunk of the market, most of the market, a little bit overbought here. So, just keep in mind what that means is that there's a growing probability eventually we're going to get that flush back down towards that daily 21 EMA. Now, when we get that flush, as long as things hold structure and support, it's a bit of a gift. Get the S&Ps pulling back, the QQQ pulling back, if they can hold support, that typically triggers that next directional push. That's the easy move. That's the high probability move. That push from that 21 EMA up there towards +2. So it's not to say the market has to pull back. There's no promises in trading. There's no guarantees. We're just trying to play the probabilities game. So we at least got to take into consideration that right now most of the market is fighting that growing probability that eventually we're going to come on back home to the 21 EMA. The other thing to note here is if you look at the Big 3 signals on the S&Ps, the Qs, the IWM, we're a little bit neutral. So it's not as if the Big 3 is going to go super bearish. We get a bunch of sell signals, and that's what triggers the pullback to the 21. Think a bit more in terms of exhaustion. All that bullish momentum, all those lower time frame buy signals, they can take you from that 21 up here towards +2. It's going to be the exhaustion of that momentum. Basically, the bulls are running out of gas. That exhaustion, that typically is what triggers the pushback to the 21. So we're a little bit extended. We're pretty neutral. There's always a potential next week. We do get a bit of a flush. However, if that 5-minute, 15-minute, 30-minute chart can go bullish, we start to get a few more buy signals here, then I do think in the short term, guys, the S&Ps might be gearing up here for a push towards 420. If they can get to 420, you're pretty much going to run all the stops from anybody getting short back here. A little bit more upside left, so I do think in the short term we could push towards 420, but the bigger picture thinking, just focusing on structure, even if we do flush, structure is good here all the way down to 400. So if we push towards 420, yeah, there's a little bit more upside we can work with in the short term, but if we pull back, I think that's a better entry. So major thing here, guys, is be patient and be disciplined. A lot of the things on my watch list like Zoom and Crowd, they're not so much overbought, they're not extended, but that golden rule you got to remember is as goes the market, goes the stocks. In plain English, if the S&Ps pull back, the QQQ pulls back, 90-95% of the stocks out there, they're going to pull back as well. So granted, I like Zoom, and Zoom is one of the names that I want to cover with you guys here today, but the ideal time to take the entry in Zoom, when it looks like this, is when the S&Ps and the QQQ have also pulled back, and they're kind of gearing up for their own push off that 21 EMA. That move in the market, the retest of the moving average, and then that push back to new highs, pretty much gives you wind at your back. So you're jumping into Zoom, you're jumping into, Tesla, Apple, Amazon, whatever the case may be, but the market itself, mamacita, S&P 500, a little bit of wind at your back. If we do pull back here, and we're long Zoom, we're long, ABC, not so much wind at our back, a little bit of a headwind, so to say. So major things to keep in mind, guys, but the structure's improved, and I think, yeah, even on a pullback, as long as we hold support, for now, the path of least resistance, looking like it's to the upside. And I think an interesting perspective, if we look at a few inverse charts, meaning we look at minus SPY, and the inverse chart just flips things upside down. I look at an inverse chart of the S&Ps, the QQQs, the Teslas, the Apples. I have a hard time seeing that chart quickly getting back to a brand new all-time high. It could happen, but a lot of things would have to improve here. The S&Ps would have a lot of work ahead of them until I could finally look at that chart and say, yeah, path of least resistance looks like it's to the upside. To me, this looks a bit more like, hey, if we can rally back to that 21 and fail, I'm looking to short the rally. Looks like path of least resistance is to the downside. Here's the inverse chart of the QQQ. I'd look to short the rally. I don't think that gets back to all-time highs anytime soon. And then the same thing goes for the inverse chart of Tesla, the inverse chart of Amazon, and the inverse chart of Apple. Pretty much the whole market right now. So I think an interesting perspective. If based on trend, structure, momentum, the big three, if you're looking at an inverse chart and it looks like the path of least resistance is to the downside, well, probably means if you look at the real chart, you might be thinking path of least resistance is to the upside. You want to buy the dip down to that daily 21 EMA. That's a thought process for now, guys. But as far as trade opportunities for this week, if you look back at all the trades we've done recently, and all the trades we're going to look for this week in the Mastery, the common theme is, our Zoom trade. We're getting long at that 21 EMA. The trade that we had in Cisco, we got long at the 21. For the trade that we had in XLE, guess where we got long? Exactly. Daily 21 EMA. For the trade that we had in Coinbase, guess where we got long? The good old 21 EMA. Missed a hell of a move last week. And then for the trade that we just had in Shopify, guess where we got long? We got long at the 21 EMA. So that's kind of the the go-to setup. Find something on top of that daily 21. Then if we can get lower time frame big three buy signals, that tells me trend, structure, momentum under the surface is gearing up for a push into higher prices. That's how we're catching these moves from that 21 EMA up there towards +2 with some pretty good consistency. So, with that being said, we traded Shop last week. I look at Shopify now. I'd rather buy that on the next pullback. It's pretty much made the easy move. I'm just looking to catch an easy move over and over and over again, as many times as possible, rinsing and repeating. So, with that being said, guys, for a lot of the market right now, it kind of falls into my buy the dip watch list. Yeah, the S&Ps might make it to 420, but on that next flush, that's where I'm going to buy calls and take a pretty good position. So the S&Ps, the Qs, the IWM, XLK, the semiconductors, pretty much the majority of the market right now, a little bit extended, guys. So for that swing trade entry that I love, we're kind of waiting on a pullback here. Now in terms of, alright, we wake up tomorrow, the market's pulling back, what do I want to buy the dip on? I think the easy trade, meaning it covers all your bases, is just buying the dip in the S&Ps or the QQQ. Look at a chart of the transports, IYT. Look at a chart of, the industrials. Look at the utilities, XLK, the semiconductors. It all kind of looks the same. So if you get a pullback in the S&P 500, kind of covers all your bases. You're getting exposure to technology. You're getting exposure to the utilities, the XLK stocks, the semis, etc. So I think the easy trade, in terms of BTFDing, buy the dip in the S&Ps or the QQQ. Now, if we're going to buy a dip in an individual stock, I think we need a little bit of extra edge. It has to look better than the market. So two stocks, guys, that I think look better than the market, Apple and Tesla. Now, the daily charts look pretty similar. A little bit stronger, but pretty similar. To me, the edge, the little bit of extra spice, the juice, one might say, is actually here on the monthly chart. Monthly squeeze, trend structure momentum fits all my bullish criteria. If the big three indicator had a monthly buy signal, Apple would have the monthly buy signal. So we've been in a quote-unquote downtrend since like last December. Nothing about the structure, nothing about the trend of this monthly squeeze has ever been anything but bullish. It's got stacked DMAs, it's got green 10x bars, got all the good shit. So until that changes, I got to look at that like I would look at any other squeeze. 5-minute chart, 15-minute chart, 2-hour chart. If I can find a squeeze that fits all my bullish criteria, then until that changes, I'm thinking that squeeze fires to the upside. And obviously a monthly squeeze fires to the upside here for Applebee's. That takes the bad boy into a brand new all-time high. So I would love to buy the dip on Apple. And then for Tesla here, we actually bought a little bit of Tesla on Friday. Same thing. Beautiful monthly chart. Has always been bullish. Right? Was never anything but bullish during this market's downtrend. Good structure, good momentum. Bullish, bullish, bullish for now. Until that changes, like Apple, I got to look at this monthly squeeze like I would look at any other time frame. The squeeze is the buildup of energy. So just by default, just the fact that it's in a monthly squeeze, we know it's gearing up for a directional move, building up all that energy. The criteria, right, my checklist, everything that goes into our big three signals, that suggests it's bullish. That suggests path of least resistance is to the upside. Therefore, for now, we're thinking, when this monthly squeeze fires, Alexa, skip. Killing my vibe here. That all suggests when this monthly squeeze fires, it'll fire to the upside, which would take Tesla here into a brand new all-time high. Things could change, the structure could go from bullish to bearish, but it's bullish for now, so I think that offers a little bit of edge in terms of, hey, if we're going to buy the dip in anything except the S&Ps and the QQQ, yeah, you might do that in a couple of stocks that got some sexy monthly squeezes. So that is the buy the dip watch list, and as far as Tesla, structure is good here all the way down to that daily 21 EMA. So this week, in the event Tesla trades under that daily 21, it might be sloppy for a little bit. But structure holds up pretty good for now, and we actually jumped into a bit of a low-risk, high-reward trade on Friday. So on Friday in the Mastery, we went with a 950, 1,000 out-the-money call debit spread. So an out-the-money call debit spread obviously is a bit more aggressive than your out-the-money put credit spread. Tesla might come in a little bit more. Structure is good down to 820. But in terms of risk versus reward, if you look at the that debit spread here, we'll do some simple math, right? Say you've got $100,000 account. Say you take a 2% risk, so you're risking $2,000. Mind you, I'm risking about 5% per trade, but easy math here. You risk your 2%. In the event Tesla can actually get back to the recent highs around 950, we're going to be up about $5,000. So you're risking 2% of your account to potentially make 5% of your account. Now, if Tesla gets crazy here, shit gets wild, and we're pushing towards that big 1K, now your 2% risk turns into a $10,000 profit on a $100,000 account. You're risking 2% to potentially make about 10%. So obviously it's elevated a little bit on my end. I'm risking 5%, so $100,000 account, you're risking $5,000 hairs. Up at $1,000, it's about a $25,000 profit. But make sure you're thinking in terms of percentages. You can risk 2% to potentially make 4, 5, 6. Good numbers there, guys. So we'll see how Tesla behaves this week. Taking a little nibble there, but that's one part of the watch list. That's the buy the dip watch list. As far as things that are actually setting up near the daily 21, kind of fitting the mold of our go-to trade, again, keep in mind the S&Ps, the Qs, the whole market here a little bit overbought. So if the S&Ps pull back to the 21 EMA, you're probably going to see everything else pulling back a little bit as well, even if it's not extended. But as far as a few of the things on our radar, check out ARK here, guys. ARK looks pretty good. Daily squeeze, positive histogram, does a good job of holding that 21 EMA, and we got a hourly buy signal here on the big 3, and it's that special combo. The buy signal plus the squeeze. So I think ARK looks pretty solid here. Good structure all the way down to that daily 21. Wouldn't mind seeing it dip a little bit, but if the S&Ps and the Qs can continue to trend higher throughout August, maybe into the next Fed meeting in September, I think ARK could be gearing up for a pretty big push here. So as far as the components of ARK, none bigger than the Zoomster here. Good old Zoom. So Zoom kind of fits the mold here, guys. It's almost there. We're waiting on some buy signals, but good structure back above that daily 21. Daily squeeze. Histogram goes positive. For now, we're neutral, though. So the importance of that lower time frame buy signal, there's the timing component. Right? By default, we know we're already gearing up for a directional move because we're in a squeeze. If the 5-minute, 15-minute, 30-minute hourly charts go bullish on our indicator, that gives us a lot of edge. Really stacks the odds in our favor of that squeeze firing to the upside. So we're waiting on some buy signals here, waiting on a few green beans, but structurally, right on top of that launching pad. So as a good example, right? Looking for the same trade over and over and over again. So a few weeks ago, we traded Zoom a few weeks ago, and it looked a little bit like this. Oh, come on, you're not going to... I don't got enough chart data. Let's try the hourly chart. Embarrassing me in front of my friends here, Zoom. Okay, so take my word for it. Here's the hourly chart. We're above the hour... Yeah, here's the hourly chart. There's your daily 21 EMA. On top of your daily 21, there's your hourly squeeze with the buy signal. There's the entry. There's the push. And we had it on the 30-minute chart. So Zoom's got good structure here, guys. No buy signal just yet, but if the S&Ps are on a mission to take out 420, we might get a few buy signals here in Zoom. If we do, we're pulling the trigger. Next up is Dollar General. Good structure, good trend, nice daily squeeze, and we got the big 3 signals on the 15-minute and the 5-minute chart. So for this kind of setup, I'll look to buy some Delta 70 in the money calls that expire in 2 to 3 weeks. Put our exit on a close under the daily 21 with a target of 2 to 3 ATR to the upside. So DG looks pretty good here. Then we've got Crowd. Nice daily squeeze at the 21 EMA. Waiting on some buy signals. If we can get them, we're looking for a debit spread. We're looking for Delta 70 calls. Exit under the 21 EMA. Profit target of 205-ish. So we got Zoom, we got Dollar General, we got Crowd, then GME here, guys. I think you wait for a little bit of a dip. And this kind of made the easy move. However, 4 hour, 2 hour, 1 hour, 30 minute, 15 minute, 5 minute, big three buy signals. It's a bit of a big three fest. So I think any dip early tomorrow or early this week in GME, it could be a buy here all the way down towards that daily 21. So we had a good trade here last week. Pretty much looking to rinse and repeat. So look for a bit of a dip there in GME. And then another one here, guys, is Visa. Daily squeeze. Does a good job of holding above that 21 EMA. If we can get some buy signals, that might be gearing up for a push towards 221, maybe 225. So Visa's pretty interesting. And then one for the back burner. This kind of fits the idea of, a short squeeze, kind of fits the idea of the market trending higher. Fits the idea of the ARK ETF gearing up for a pretty big move. Keep a close eye here on ROKU, guys. It's still lacking in structure. So I would like to see at least 2 closes back above that daily 21 EMA. And then I wait for a few buy signals. But if we can get a couple buy signals with a little bit of structure, I think at a minimum, pretty much right now, I think if anything hasn't already gotten back to that weekly 21 EMA, as long as the S&Ps are strong, I think it's got a shot at getting there. So for ROKU, you got your weekly 21 around 105. We're trading down here, guys, around $80. So a couple closes back above that daily 21. Couple lower time frame big three buy signals. That might make for a push up there towards $100. So keep that on the back burner, but for now I think you got better structure to work with in the Zooms, the Crowds, and the Dollar Generals. Alright, my friends, so there you have it. Hope you found this helpful. And one more chart for you to watch here. Got to keep a close eye on the dollar, the Dixie. This could be pretty big this week. In the event the Dixie stays above that daily 21 EMA and begins to trade a little bit higher, I think it's a bit more likely that we get a flush in the S&Ps and the QQQ. The dollar, it's playing tough to get here. Being a little bit tough. Doesn't want to throw in the towel and give us that flush. Probably one of your better trends in the market. So keep a close eye on the Dixie. In the event this can flush under that daily 21 EMA, it does the S&P and the QQQ a lot of favors as far as, looking for prices to continue to the upside. So keep a close eye on the Dixie here, guys, but that is what I got for y'all for now. Market looks good in the short term. I do think path of least resistance is to the upside, but we got that growing probability that eventually we're going to get what I think might be a buyable dip down towards that daily 21 EMA. So we'll see if there's enough gas in the tank here this week, for the S&Ps to push up here towards 420. And a big part of that would be, okay, well, if we're going to continue to push here, we've got to get some buy signals on those lower time frames. So if you guys want to learn more about the Big 3 indicator, I'll put the link in the description to the video that we did a few weeks ago. That'll kind of give you guys the whole backdrop. What's the criteria that goes into the signal? Why did we build it? How did we build it? And how am I using the indicator to find all these awesome trades? But that's what I got for y'all for tonight. Hope you found it helpful. If you haven't already, go on ahead and subscribe. And again, guys, check out the Mastery. $47 for a month. We'll trade together twice per week. I'll hit you with some Big 3 trade alerts. Pretty confident you get a good return on your investment. But have a good Sunday, guys. Enjoy the rest of your night, and I'll talk to you tomorrow morning for pre-market prep at 7:45 a.m. Central. See y'all then.